Hello guys and welcome. Today I just want us to quickly talk about clubs, particularly the receivables for membership fees account, right? So we are going to start by the definition. Clubs really relate to organizations that are started with the objective of benefiting the members of the clubs. Clubs, they don't have the objective of generating a profit. So they don't exist to make a profit, but to serve the needs of the members of the club, right? So if you then talk about their income, so clubs generate income from various sources. One of those sources is membership fees income. Membership fees income, which is yearly or monthly subscription fees that are contributed by the members of the club, right? So they also can generate income through entrance fees, but this depends on the nature of the club. So if they tell you that the entrance fees are not capitalized, it means that the entrance fees are treated as income. But if entrance fees are capitalized, that simply means that those entrance fees are going to form part of the statement of changes in equity of the club. That is very important for you to consider. And then it can generate income by raising funds. They can host things like maybe tournaments, right? They can host things like tournaments, and also they can raise funds or raise income by asking for donations. So these are some of the sources of income for a club, and what I'm going to focus on, or the account that I'm going to focus on, is the receivables for membership fees account, which is very, very important when you are doing accounting for clubs. So how does this account look? What is the structure of this account? And how do you even record information in this account? This video is only going to focus on the structure with the hope that when you go and practice the questions on your own, you are going to be able to use the information that is provided in this video. So let us draw the ledger account for receivables for membership fees, right? So as you know, receivables for membership fees is a what? Receivables for membership fees is an income account, right? Membership fees, right? So it's not income, sorry, it's an asset account, which simply means that it increases on the debit side and then it will decrease on the credit side. So on the debit side of this account, balance brought down. This is what? This is accrued income for membership fees. What that basically means is that these are the membership fees that are outstanding from last year. So it's accrued income from last year. So it's opening balance of accrued income for membership fees. So these are the people who did not pay, who were supposed to pay the membership fees last year, but they did not pay. They are owing the club these membership fees. It's accrued income. It's income that we are still expecting to receive from last year. So accrued income is a what? Accrued income, it's an asset. That means that it's going to be recorded on the debit side of these receivables for membership fees account, right? And then also the closing balance of accrued income, the membership fees that we're expecting to receive this year but were not received are also going to be recorded here as the closing balance. So this is the balance brought down, right? So this is accrued income. Accrued income when? Accrued income for this year, right? This is accrued income for last year. So this is the opening balance, this one. This is the opening balance of receivables for membership fees. This is the closing balance of receivables for membership fees. It's accrued income, right? So, and then, as you know in accounting, when you record the balance brought down, you record the balance carried down on the other side, right? So that means that the closing balance of accrued income, the receivables, the membership fees that are outstanding for this year, right? It's the membership fees that we're expecting to receive this year, but these members did not pay. This is the closing balance, right? You are going to find this on the statement of financial position under current assets, right? So this amount that you record here is going to be the same amount that you record here, right? So the closing balance, this one is the opening balance, right? And then from there, you on the other side, on the credit side, you are going to have the balance brought down, right? So this balance brought down, it represents what? It represents the income that was received in advance last year for this year. So this is income received in advance last year, right, for this year. So another way to understand this thing is that income received in advance is a what? Is a liability account. So if income received in advance is a liability, that means that it's always going to be recorded on the credit side, right? So even here then, under the receivables for membership fees, the income received in advance will be recorded on the credit side, both the opening balance, so this is the opening balance, and the closing balance, right? So the closing balance of income received in advance is also going to be recorded where? On the credit side, you see. So this amount, you are going to get it from the statement of financial position under current liabilities, both the opening and closing balances. In accounting again, if you record an amount here as a closing balance, that means that you need to record the balance carried down on the opposite side here. So these amounts are going to be the same. This is the income received in advance for next year. So it's received in advance this year for next year. It's a current liability, so it's going to be credited, right? And then from there, you have to think about, okay, what increases receivables, right? In a normal business, what would increase receivables is more credit sales, right? What are credit sales? Credit sales, it's when a customer buys something today, they collect it today, but they pay later, right? So it means that it creates an expectation from the business to receive income from the people who bought from the business on credit. It's the same idea here as well. Each and every year, the club is going to recognize, it's going to have an expectation of membership fees, right? It's going to expect to receive membership fees from all the members. By virtue of someone being registered as part of that particular club, the club has the right, has the right or is entitled to collect membership fees from that particular member. So that means that all the membership fees that the club expects to receive this year are going to increase the receivables for membership fees account. In a normal business, when a customer buys on credit, you debit receivables and then you credit what? You credit sales, right? Because you are saying, I am expecting to receive whatever amount from this person who bought on credit, right? For a club, you are expecting to receive membership fees from all the members that are registered as part of the club. So you are going to debit receivables for membership fees and credit membership fees income. It's the same concept. Here you have an expectation of receiving these membership fees from the members. So that particular amount is an amount that you are going to record here, right, as membership fees income. It increases the receivables for membership fees account. So this amount is the amount that excludes VAT. If you are given financial statements, you are going to get it under the income statement of income that is going to be given there. That's the amount. It excludes VAT. So if the club is a registered VAT vendor, you also need to account for VAT output because they are selling a service here, right? So we are going to say this amount here for membership fees income times 15 over 100 to record the VAT here output. And then on the credit side, you have to think about what reduces receivables, right? In a normal business, when people pay, right, their debt and then the receivables go down, right? So this amount for bank includes the amount any amount that is received for membership fees income, right, be it last year, this year, or next year, it includes all those amounts, this amount that is recorded here. Most of the time it's the balancing figure. If it's not this amount that is the balancing figure, it's this one, right, depending on the nature of the question. What also reduces the receivables for membership fees account is those members who fail to pay their membership fees and they are written off as bad debts. So that is going to reduce the receivables for membership fees income account, right? Remember, when the club is a registered VAT vendor, you need to also account for the VAT input here, right, for these bad debts, right? So it's going to look like this, the account. This amount, you get it from the statement of income, right? It's the equivalent of the statement of profit or loss, but here it's called the statement of what? The statement of income, right? This amount. Even this one, you get it from the statement of income. This one, you get it from the statement of financial position, 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 right? And then this one is a balancing figure, right? Unless you are given the statement of receipts and payments, which is a different story. If you are given the statement of receipts and payments, this amount you are going to have it, but this one is going to be the balancing figure. So that is all that I wanted to explain to you guys in as far as this receivables for membership fees account is concerned, and just a quick introduction to clubs so that at least when you go in practice you can be able to understand what you are doing. Thank you very much. I'm going to see you, or we are going to talk on the next video.